Hello. Hello and welcome. Just to introduce myself, I'm Ijoma Ndukwe. I'm a journalist at BBC World News, and I'm very pleased to be guiding this conversation on the consolidation of Africa's insurance industry. So just to get us started, we've got an expert, Frederick Boutet, who's going to talk through the key developments and trends within the sector.
Good afternoon, everyone. So I'm the after-lunch speaker, which is always a little bit complicated. So that's why they pick up a natively French, based in Johannesburg, to do a speech in English. So I'm sure everyone's going to be focused now. So very happy to be with you. Today I would like to leave you with three messages. The first one is the potential to develop insurance business in Africa is absolutely huge. And I think that there are many opportunities and many ways of doing it. That's the first message. The second one is actually to do that, the bank insurance model, which is a combination of insurance and banking, is one of the most efficient one and one of the most profitable. And very interesting, and it has been some of the key success factor of insurance business in some geographies in Europe or in LATAM. And the third one is bank insurance is interesting, but there are also other opportunities in partnership that can really boost the insurance business in Africa, either through telecom player or either through ecosystem approach. So now it's done. So let's move. So market adjust, I was explaining. So if you take the life insurance business, just to kickstart, on the x-axis you have the 2019 market size and the expected CAGR between 2019 and 2025 in the y-axis. So you can see that we're talking about double digits, which I think is really the most important message. Everywhere we're talking about, in big geographies, we are talking about double digits, which is something and a potential that obviously you can find in more mature geographies. Same for P&C, for property and casualty. Again, double-digit growth potentially with some geographies like Ghana or Ethiopia that can grow a lot, and a market which is today very polarized on North Africa. So why bank insurance is very an interesting model and a winning potential play. First is there is a strong rationale for bank, and as we're talking a lot to bankers today, I think it's key. There are a lot of economic rationale, both in terms of expected growth, both in terms of return on equity that you can expect. So, sorry, it's Europe and LATAM number because I took the number of the more mature market to give you a sense. But also in terms of price-to-book ratio. So doing more insurance, if you take the kind of sum of the part, is much more interesting than doing only banking. And I know that in terms of NBI, in terms of income, insurance is very small in a portfolio of a bank, for sure. The bulk of the revenue pool are made on deposit, on loans, on other fee business. But in terms of result, in terms of earnings, in terms of bottom line, this is very attractive. And you have a couple of banks based in Europe or in LATAM that can generate up to 30% of their profit, meaning their earning, just with insurance business. So first rationale, it's very good for bank. It's also very good for client. And I think it's key because as a bank today, you're really focused on, I know, improving the customer experience, making sure that your clients are satisfied. The question is not only selling product, is to create a kind of seamless and beautiful experience. And insurance helps a lot in that. It helps in terms of personalization of sales because when you combine the information of the bank with the information of the insurer, then you can really push the right product for the client, which in terms of insurance is absolutely key because doing that means that you're pushing the right coverage, that you're pushing the right guarantee at the right price. So you can be personalized, therefore creating stickiness of your clients. Secondly is the underwriting is much more simplified because usually you have a lot of information with regard to your client, so you can pre-quote a lot of deals, which at the end can create a lot of speed to market in the way you can push your product. And last but not least, having already some digital channel, you can use the insurance product included in a seamless customer journey, which help a lot also to have like a very efficient sales process. Another lesson learned that we can get if we look a little bit beyond Africa, which I think is interesting, is that bank insurance is also often an innovation engine for insurance product. Insurers have been a lot of innovative, but banks also are innovative, which I think is interesting. So I pick up a few examples here. I'm not going to go through in detail, but there are a lot of interesting experience in terms of 3 years flat fee, for example, so in terms of pricing strategy. In terms of packaging of solution, you have players like Rabobank or Achmea that really build, especially for agriculture, very interesting all-in-one policy where you can find everything in terms of coverage. Also in terms of flexibility offered to the client, a bank like bancassurance offer you the possibility to switch on, switch off your insurance product. Intesa offer you very modular offering. And I'm going to go back to that. There are also a lot of bank insurer and insurer that go a little bit beyond insurance to really develop new business line and new revenue. So as I said, bank is one of the key partners for insurance, but I think that there are other partners that are also very interesting, and this is a telco player. I think that especially when we're thinking about a penetration of the market, if you want to address a lower segment in terms of income, one of the key points is to decrease the cost to serve. And the way to decrease the cost to serve to your client is obviously doing some partnership, and especially with telco. So that's why in Africa, in the last 5 to 10 years, we saw a multiplication of partnership between telco and insurer. One of the biggest, which is not in this page, is also MTN and Sanlam. But you have many, many of them. And often very innovative, either in terms of the channel that you can use to contract, for example, only using USSD to contract, or either in terms of product that you can package. So telco company can be a fantastic partnership for insurance to develop this concept. I think that one of the way to develop insurance also in Africa continent is also the logic of ecosystem. I don't know if you are all familiar with Vitality. Vitality is a program that has been developed by a South African insurer called Discovery. Discovery is a health insurer, but they created a full ecosystem by creating partnership with other brands, where they are using the data of their client to really be able to propose the right pricing, the right product, and create the right stickiness for the client. And by doing that, they really are able to leveraging an increasing number of touch points with the client, which creates the value that you can extract to really be very, very personalized. Because I think that you all know that one of the key issue of the insurer compared to a banker is the number of touch points with the client on a certain period of time. You usually talk during the claims or during the moment where you sell the product. With creating this kind of ecosystem, this kind of insurer have created multiplication of touch points and therefore was really able to create and generate more value. And maybe just to finish, a last example, just to say that it's interesting to say that, okay, insurers are trying to go and create new revenue stream by going much beyond their business. But at the same time, you have some companies that are going into insurance to really build ecosystem and diversify their revenue stream. If you take Qantas, which is an airline that I guess you know in Australia, they created from scratch an insurance company, again, to create an ecosystem which generates touch point and stickiness with their client. So I'm done for now, but just to say that, again, the potential is huge in Africa, either for insurers by working by themselves, or either with insurers working closely with banks or other partnerships. Thank you very much.
So thanks to Frédéric Boutet for those insights. So without further ado, I'm going to welcome our panelists onto the stage. where joining us is Abena Kasewa-Brown, who is the chair of Ghana's National Insurance Commission. We also have Emmanuel Brule, who's the CEO of Sanlam, Pan-Africa General Insurance. Jean Kaku Jajo, the president and founder of insurance and banking group NSIA, is also joining us. And we welcome Mustafa Roji, the managing director of Raw Bank. And last but certainly not least is Ashok Shah, group CEO of APA Insurance. So if you just join us on the stage. So welcome and thanks so much for joining us today. I think the best thing to do is just to get started by giving us, it would be good to get some context and a sense of what challenges the insurance business is facing at the moment against the backdrop of a series of crises. So, from the COVID-19 pandemic to today's high inflation environment. So I'd like to get your take on that, Mr. Shah. I'd like to know what shifts APA Insurance has had to make in order to adapt to these crises that we're currently living through.
Well, as insurers, we have to face crises because we are in the risk business, and when the crisis comes, we have to decide how we are going to deal with the crisis. COVID was a very interesting example. What happened was when COVID struck, we had to decide, are we going to say it's a pandemic so we do not cover it? Or do we decide otherwise? And APA Insurance decided that we'll pay all the claims for COVID under the health insurance and life insurance covers up to the full value of the policy. That was a decision we said we'll take it for 1 year. After the first year, then we changed because we found that we had actually paid quite a lot of claims. And then we put a limit on every policy because there were no limits before. On the high inflation as it is coming in now, the biggest problem that I think we find as insurers is that we are not quick enough to tell our clients to change, to start looking at the values. The most important values that a person will have is the assets. The asset cover, all of a sudden, Kenya shilling has gone from 100 to 120 shillings. And also the inflation has now come up to about 10%. So we have to now start advising all our clients is that please look at your values, see how you increase it, because you are the best person to decide what is the value. So inflation means that the client must be made aware of the problems they will face if the covers are not increased.
Yeah, that's interesting stuff. I'd like to bring you in there, Mr. Brule. And what would you say, what steps have you had to take to mitigate the challenges that the rising cost of living poses for the industry?
I guess that there is a different way of addressing it. It differs a lot when you address the personal lines business or the large corporate. As Ashok mentioned, on the large corporate, it's relatively more easier to have a discussion with your customer to revise their insured value and to be sure they're properly insured. When it comes to the personal lines, it's all about also insurance premium affordability, because that everybody has been impacted by the crisis, back to back with the COVID, inflation for everybody. So the challenge is to adapt your product in terms of cover, in terms of premium potentially. But what we try to push a lot on our side is to differentiate on services, because at the end of the day, as Ashok said, that we like when crises happen because we are here to take risk, but the differentiation is happening at the crucial moment of the claims. It's why that investing in services is still the most important thing to do.
Okay, so let's shift gears a bit and just look at financial inclusion, because it remains a major challenge in the region as much of Africa remains unbanked. So based on that, what role could partnerships between traditional insurers and financial technology firms play? And I'd like to hear from Jean Kaku-Jago on that.
Bonjour, madame.
Good morning. I believe that the new technologies allow us today to do what we could not do in the past, and to reach out to people who, as it were, could not be consumers of our insurance products because they have a level of living standard which is not high. The insurance companies from one country to the other is extremely expensive. This is why the advent of fintech, that is digitalization, makes it possible to reach out to people, a wider population, almost everyone, what we could not do in the past, at costs that are affordable for the insurer and the consumers and the insured. So as far as we are concerned, the advent of digitalization is a step in the right direction. Well, we will leverage on this crisis, COVID, which was very important, that accelerated digitalization and makes it possible for us to the insurers to propose products. People we could not offer these products in the past. In every cloud there is a silver lining, as they say.
Because I know that Sanlam has recently announced a joint venture with MTN. So could you talk us through that venture and how it's helping to boost financial inclusion?
Of course. So what is critical to access this new type of customers is, of course, to be very effective in terms of the servicing, the product, the premium. But also we believe a lot that affinity approach is critical. Even so, if you got a very low premium, very specific and oversimplified product, to distribute the product one by one is still very complicated. It's why having an affinity partnership is critical. And with MTN, we got, by definition, millions of customers of MTN. And the objective for us is to leverage of this customer database to offer them very simple product within their usual course of doing business with MTN. We don't want to be a disruption. We'll be part of their process. And for instance, each time they're going to buy additional cover, or they want to bring new things on their mobile portfolio, mobile money, we are going to offer product. So it's mainly to be very simple product on life or Cash. And the idea is to leverage oversimplified product with affinity group of customers and with a lot of data insight from M10 to be sure that the product we are going to offer is very specific and targeted for these customers.
And how did this partnership come about?
In fact, that Frederic mentioned IO partnership with MMI. What is very critical is having, for this type of partnership, is the geographical network to be quite equivalent on both sides. So MTN is in a number of countries in Africa. We are in 25 on our side. So overall, we are in 15 countries together. And it's why that working a lot of sense to try to build something. And to build is not a partnership, it's a joint venture, a capitalistic joint venture, just for the long run, because it will require a lot of investment. And it's why we opted to go for a joint venture model.
Okay, so it's definitely a joint venture that made sense for you. But what potential would you say, Mr. Roji, would you say that partnership opportunities present for both insurers and consumers? Yes.
So I think the question of partnerships is critical. Leveraging industrial strengths from different core competencies and creating synergies between that to create value is critical. So you would see insurers working with mobile operators, banks working with insurers, mobile operators working with banks. Because at the end of the day, the trend has to go towards to inclusion. And as we all know, the African continent suffers from sort of, lower levels of inclusion than we would have in other continents. So the objective is quite clear. I think all the players within the environment and the ecosystem are quite clear about where they want to go. And it's extremely important that we synergize and bring to the table the strengths that we can offer in order to create additional value with potential partners.
Okay, I'd also like to ask you, obviously brokers and agents remain the most prominent distribution channels for insurance. However, we've seen direct sales and bancassurance increase their share. What would you say can be done to accelerate that trend?
So, again, what do banks bring to the table in the process of selling an insurance product? And the first thing is the relationship. So the banker and his customer have already developed a relationship of trust, a relationship of understanding, and the banker can really understand what the needs are of his customer. One can leverage off that relationship to really sell the adapted insurance products to that customer, avoid mis-selling, and ensuring that that customer also has a one-stop shop for sort of his financial solutions, be it credit card, a mortgage loan, or an insurance. As you also know, banks are financing the economy. So whether it be retail lending, SME lending, or corporate lending, you try to mitigate risk. And one of the ways to mitigate risk is ensure that your customer is well insured and is adequately insured, so that if any unforeseen event was to take place, the bank can also protect its capital and its sort of its balance sheet, thereby strengthening the relationship. So it's a highly educational process in a market like DRC, where we generally have underinsurance. I don't know how familiar you are with it. We're under the supervision of the ARCA, and we saw earlier Frederick's slide on growth rates across the African continent, and we should be very proud at the DRC to say that our CAGR over the last 4 or 5 years has been north of 35%. And we earlier looked at the slide, I thought 15% was one of the countries that I see, but we're growing at a 35% clip in the DRC 2019 to 2023. So it's accelerating, and I think all the players are doing a lovely job, and the regulator is ensuring that everybody plays the industry the way it should be done.
So what role does regulation play in encouraging the growth of this trend? I thought you'd be the ideal person to tell us more about that, because in Ghana, the life insurance market saw the bancassurance share of premiums almost double from 7% in 2015 to 13% in 2019. So what would you say, to what extent has structural reforms helped to fuel this growth?
So in Ghana, the Commission actually rolled out its act, and basically it has put in directives for the bancassurance, how to operate. And basically we are in the process of developing the regulations for the act, and hope that by the end of this year, going into next year, we'll get the Parliament to actually approve the regulations, which will then cement the act that has been rolled out already. But when it comes to bancassurance, prior to that, there was nothing really there. But now that we have the act, and they have been mentioned in there, definitely they can now be guided by that. And obviously the Commission can also use that to regulate the industry and the bancassurance product.
Can you just drill down into the details of this act? Just tell us a little bit more about it.
Oh, the act is wide. I mean, it covers beginning to end. This is it's an improvement of the previous act, and it's if you look at what happened, the evolution of the industry, we have now captured quite a number of new things that are appearing, including, for example, we are going to create, we have insurtechs, we have the technical services. All of these have to now be regulated, where previously we didn't have to worry about it because it didn't really exist. And again, we have created a law for innovation, whereby we'll be able to create sandbox for these insurtechs and fintechs to actually come and test whatever products, so that they can actually roll it out. So the current law that has come about is something that will definitely support the industry immensely. And once we get our regulations out, it will also strengthen the Commission's directives on them, so that they can, at least we can make sure that those who are recalcitrants are put into the right straight path, as we may say. Yeah.
So it would be good at this point to hear from some of the leaders of the insurance companies about what kind of regulation you'd like to see in the markets you operate in, and what kind of regulation you feel would help to strengthen the sector.
Mm-hmm.
So, Mr. Judge?
Ça dépend.
It all depends. It all depends. At the CIMA space or region, I mean the Francophone, Sub-Saharan Francophone Africa holds the insurance. Insurers like me, what would love to see, the first thing is to have a unique license. Unique license, because you know, having markets that are so split, or small markets, will not have an insurance company, no matter the size of the company, to make investments in human capital and the quality of consulting firms that will be in position to come up with good products for our customers. And then this will not allow us to have equity that are appropriate, so that we can capture and have premium, insurance premium, that are really appropriate as well. If you are an insurance company with your own equity, small equity, you are compelled to move into reassurance and to move abroad most of your insurance premium, which is not beneficial for the economy of the country. So then, just like the banks, what we want to see is to extend the insurance market, so that by so doing we can work in a more broader space with our own equities that will be more substantial, and not have, for a group like mine, we are in 12 African countries. We have 12 companies with equities for each company. With the chairman of the boards for each of the company, and CEO for each company, board of directors for each of those company. And this is costly. This will not allow us to optimize the profitability of the insurance company, which is the first thing. The second thing that we want to see, if I'm speaking to the regulators here, the second things we want to see is to come up with compulsory insurance schemes in all the developed countries. Compulsory insurance schemes are parts of the range or the portfolio of insurance products. In our countries, we have only third-party liability insurance, which is compulsory. It's not possible to develop the market and have companies that have potential to develop the countries and contribute to the development of the country. We also need develop compulsory insurance. And the third thing, if I may, a very quick one, is that our government or the states, they must get insured. They must insure their property. The state must insure their property in our country, we have vehicles, state vehicles, that are being driven just like any other vehicle. They get involved in accidents, and if you involve in an accident, a road accident with a state vehicle, rest assured that you'll never be compensated. You'll never be compensated for that, and this is not good. And the government has good properties, and they can also insure the property. For instance, fire, against fire, they don't do that in such a way that when there is a fire that breaks out, if fire breaks out in a public administration building, it is at that time that they ask for donation and grants from France, from the UK, from the United States, because they did not plan for the insurance of those public administration building. It is very simple to have a budget allocation for an insurance premium, and you feel comfortable in case there is any disaster. These are the three things I can ask the government and the state public authorities if they are here. This is what I would like to ask them. Thank you. Vous voulez ajouter? Je crois que vous étiez en train de hocher la tête. Donc vous...
President Diago comment on the unique agreement. I guess it will be an ideal situation, but there is a lot of political issues to overcome, because if you looked at what happened in other markets, in Europe or elsewhere, when you start to have this type of unique agreement, you are going to have very few insurance places that will become the place to be, and a lot of countries will be losing a lot of insurance. So I guess we have a transition to face. I bet it's a political issue, I agree. And the second thing for me that is important is also, when we are speaking about capital, is to going to push the solvency risk-based regulation. We have in some countries already on that basis. We don't have to go straight to the Solvency II equivalent, of course, but a basic of solvency based on risk is quite important to help everybody, the regulator, the customer, and the insurer, to better manage the capital and to use less capital. So I guess that on top of what you mentioned, I guess that risk-based solvency is quite important.
I think maybe there's one thing that I would like to add to this conversation is that I think the minimum capital requirements in African markets should be higher for insurance companies to admit it into the market. And the reason being is when the capital is lower, you get sort of early stage players that come into a market with very little experience, very little knowledge and background. Immediately they set up their insurance company, they have overheads and expenses. And as they don't have a client base, they can sort of do price dropping to sell insurance that are at unreasonably lower cost. So that when the claims come in, then you sort of see the company ceases to exist. So it's a certain level of conscious responsibility on admitting players that are really willing to put the capital that justifies the size of the market that's in front of them. And I tend to think that when I look at different African markets, the capital requirements are actually quite low given the size of the market which they're looking to enter into. So that was just 2 cents there.
What are your views on that, Mr. Ashok? Do you think raising capital requirements is the way forward?
Well, one of the things is that an insurance company has to be stable and it has to be well capitalized. So a lot of markets are now going to risk-based capital. And say for Kenya, for example, in Kenya, what we have is everybody has to have risk-based capital, and it should be 200% of your liabilities. And the liabilities does not mean just the claims liabilities, but it also means where you invest your money, who are your insurers. So that's all taken into account, and then you have to have capital charges. But the problem that we have is the regulator has to be strict. And this regulator has to make sure that all companies are on an equal level playing field. And you certainly find that a lot of companies do not have capital, and yet they're allowed to continue trading until you continue insuring people. So that is one area that we really have to make sure that regulators now become strict and make sure that companies do not have failures. Because the biggest problem that, going back to if you look at the penetration rate of insurance in Africa generally is very low. It's very low for several reasons. One reason is that a lot of our population do not understand, they are not aware of insurance, what it can do. And we have not gone out to tell them that insurance can be beneficial. That's number one. But number two is that what happens is that we as insurers only sell to the people who are already insured. So we sell to the people in the urban areas who have motor, where they require compulsory insurance like motor vehicles and other covers. But we do not actually tell them what are the benefits of insurance. So that's the biggest problem that we need to do is how do we go to the general public and explain to them make them aware of insurance, the benefits of insurance, but we also have to give them the right solutions. Right solutions, like in agriculture insurance, what we are doing is in microinsurance, is we are giving a benefit of 70% yield cover. Now, but how many farmers understand that the yield cover is 70% and take the benefit of it? So we need to partner with banks and aggregators to make sure that the farmer or whoever that we are insuring understands the value of insurance. But going back to the regulator, I believe that regulators have a very strong role to play, but they sometimes do not take the action of closing down companies which should be closed down. And that is the biggest problem that we have.
So I can see you have something to say on this matter. I also wanted to put to you as well, do you think the tightening of capital requirements could force the consolidation of smaller players? And would you say that would be a good step for the industry?
Well, going back to the Ghana story, our new act actually raised the capital to 50 million from 15, so about 233% increment. And of course, coming back to what you just said in relationship to ensuring that we have to close down some of the companies, that is ongoing. But, in our African context, maybe I'll just say Ghanaian context, it was actually anticipated that the increase of capital will result in mergers which will increase to make us have larger companies. At this point, I go to our cultural context. We don't seem to have many people wanting to do that. I mean, you actually find people losing their companies rather than coming together to set up a bigger company. So we didn't have that many companies coming together. However, currently our commissioner, he's very tight and very strict. So monitoring, we've been going through the process of making sure that the capital that they are required to have is definitely going to we're definitely going to make sure they have it. We actually are learning from the banking industry, which also raised their capital, obviously, also by 233%, but much larger. And there was a lot of noise. So thank God with the insurance industry that there's been less noise in the country. And we are hoping that as by the end of this year, we would have sort of finalized most of the things that we need to do with companies, ensuring that they comply with what the regulations say, the law says. Thank you.
Well, I know that Sanlam purchased Saham, which allowed you to gain a foothold in more than half of all African countries. Could you tell us a little bit about what other ways you're planning to enter new markets?
In fact, that if you're looking at the journey of Sanlam, is a 105 years old company. They spent almost 95 years working exclusively in South Africa, and then they have been going outside of the borders of South Africa. And he went through acquisition, and then they decided that either we go one by one, or we are making acquisition or partnership or capitalistic alignment with some regional groups. This is what happened, for instance, with Saham Finance First, when at the time he was co-shareholding just to learn each other and to grow the business in a number of countries. And it was very complementary in terms of geographical scope. And that and it was working very well for us because that we don't have to invest country by country. And basically that the strategy today is to continue to consolidate. The last one we announced is the joint venture with Allianz that is under regulatory approval as we speak. And going forward that it will be more to target some specific countries where we believe that there is a lot of opportunity and where we are not yet. But I guess for us, having gone through this type of acquisition as regional group, made a lot of sense in terms of scale, but also in terms of culture and in terms of acquiring the best talent in the market.
Okay. So I just wanted to close by talking about some of the risk factors that we kind of started the conversation talking about that. But I just want to look at specific risk factors that are kind of mounting and getting more kind of prominence in the media, such as the climate crisis, cyber attacks, also agricultural risks, which I know you, Mr. Shah, you've been dealing with in the work that you do. How would you say that your businesses have been impacted by such risk factors?
Well, one of the things that we started doing was looking at the climate crisis that is now at the top of everybody's mind is, I think we did it by accident. In 2016, we started insuring the livestock, the pastoralists in northern Kenya, and then also we started insuring farmers in the central Kenya region. And what we found out is that as we were going along insuring these two different classes of people, we realized that we were actually supporting them to mitigate climate risk. The pastoralist in northern Kenya, there is an interesting exercise that we did. We tied up with ILRI. ILRI is the Foundation for the Livestock Research Institute, and they started planning about how to cover the pastoralists for their livelihood. And the thing that we did was, what ILRI does is that they came to us and they said that we do not insure the animal, we insure the forage on the ground. And it was done through satellite technology, and what we did was the satellite would be taking images of the forage on the ground, and as it went down, it would then tell us, and then a trigger would be reached. When the trigger is reached, we would then pay out to the farmer enough money to keep the animal alive until the next rainy season. So that was one area that we started doing. And that turned out that we actually started playing a role in mitigating climate risk. And the same thing we started doing with the crops. In the crop, what we started doing was we started giving cover to the smallholder farmers who had never insured and they did not understand insurance. So we tied up with aggregators who would provide them with inputs. And through the aggregators, we were able to give them first the cover for crop, that they will have 70% yield. And the second thing that they would also have is that we would bundle, they will credit cover, credit risk, because the amount of they had borrowed, they had been lent by the aggregator, would be covered at the same time by the same cover, so that in case the yield fell below, then we would pay the aggregator and not the farmer. So in a way, we started, we have gone into supporting climate risk. And for that reason, I think in 2019, APA was the first insurance company to receive the microfinance award for the world through microfinance in Luxembourg. But what we need to do is that perhaps we need to start looking at which are the other areas. that we can go in. One of the areas is that in our countries there is a lot of people who live in slums. They live in slums and they've got lots of problems. First thing is their properties are not covered against fire. If they fall sick, there is no cover. So we have come out with a product which is called, which is bundles risk for fire, for hospital cash, and when there's a bereavement in the family, as family support cover for 6 months. So in a way, what we need to do as insurers is we have to start thinking about social insurances that we can bring in and support. But even social insurances means to us that we must, at the end of the day, be able to make a little bit of money, perhaps not too much. Profit is important. So we have to risk, while we risk going in, for 2-3 years we'll make losses, but after 3 years we'll start breaking even.
Gosh, right, very interesting stuff there. So just to close, do you have any of the panelists have any final thoughts that they would like to add, or?
Well, what we need to say is that the African financial industry is here. How can we collaborate across the whole financial sector, financial industry, and combine the strengths of the banking industry and the insurance industry to see how we can support the people who need insurance the most? Is something that perhaps we should start thinking about.
Okay.
From my perspective, coming particularly from the banking industry and looking into the insurance industry, I'm actually enthusiastic about the talent. How do we get our young talent to learn more about insurance and educate them so that we can put in a new lease of life? Because if you go into the universities, most of them want to be bankers. They talk about going into the banking industry because of what they see. Obviously, capital in the banking industry is much higher. So how can the insurance industry, even though we do have less capital, how can we get people to be interested and understand what the value of insurance is? And that's really what I wanted to say. Thank you.
Moi, je voudrais que
Let me simply add that when it comes to bank insurance, the concept should be monitored by the lawmakers. We should know clearly how we can deal with that. Indeed, I've had discussions with lawmakers who believe that when we refer to bank insurance, the bankers should take the risk. And so they are doing everything possible to prevent this to happen. We must clearly explain to them what we mean. We should sit around the table, the line ministries, the insurers, all stakeholders, so that bank insurance framework should be well enlightened and well spelled out, so that the banker clearly understands that when we refer to bank insurance is to use the banking network to sell insurance products, to allow customers of the banks to buy insurance and bank products at the sale points of the bank. In other words, to have single windows in the various branches of the banks. Perhaps once they understand this, they will adequately pass the laws and support bank insurance that makes it possible to reach out to people that insurers cannot reach out to as we speak, and develop insurance. And the banker will leverage on this through the commissions that will accrue from the sale of insurance products.
Panelist here, we've heard from Ms. Abina Kasewa-Brown, the chair of Ghana's National Insurance Commission, Emmanuel Brule, the CEO of Sanlam Pan-Africa General Insurance, Jean Kaku Jago, the president and founder of Insurance and Banking Group, NSIA, Mustafa Roji, the managing director of Raw Bank, and also Ashok Shah, group CEO of APA Insurance. Thanks so much for all your insights. It's been great hearing from you. Thanks so much. Thank you. Thank you. Thanks very much. And now we're going to speak to, I'm just going to have a conversation with Alan Kaninda, who's the Director General of ARCA, which is the Insurance Regulatory and Supervisory Authority. And we're just going to have a brief chat just to go over the key highlights from this conversation. Thank you so much.
Thank you very much.
Thank you.
You're around, are you?
Yes, I am. Yes, perfect. Hello. Have you got a microphone? Yes, you can sit here. Thank you. So what would you say were the highlights from that conversation you just listened to right now?
Okay, thank you very much. If you allow me, I'll speak and reply in French.
Yes, that's
so
fine.
I can express myself very, very clearly. Je pense que ce que nous pouvons noter.
The takeaway from the discussions is the need to have solid finance on the part of insurance companies who should be on the market depending on the challenges on the markets. If you so allow, briefly let me provide introduction to give a practical answer when it comes to opportunities to consolidate, when it comes to insurance companies. Now, the DRC market, the Democratic Republic of Congo, it's a young market that has just been liberalized. It's about 5 years that our market has been liberalized, but the market has been really opened up in 2019. We certified new insurance companies that entered our market. Over the past 3 years, the way the market evolved, I believe Mr. Rauji said it, we have a growth rate that's been important from $80 million with one insurance, FT Automobile, and later 2021, $220 million, which is really organic growth. The reality of our market in the DRC, as we speak, is a market hovering between $1.5 billion. We have still a gap which is extremely important, and we need to fill that gap. To do so, we need insurance companies that are robust. We as regulators, we are doing everything possible to ensure financial solvency of insurance companies operating on our market. Consolidation issue, as far as I'm concerned, first of all, has to do with the strategic vision of all the various stakeholders. We as regulators, we should ensure that the individual companies have that financial ability or the financial might to address issues on the market.
Saying that they need stricter regulation, calling for stricter regulation. What do you think when you hear that?
Ça me surprend agréablement parce.
Well, I'm surprised. And I'm happy to be surprised that they understand their role. As regulators, we have two major missions assigned to us by the state, broadly speaking, to ensure the protection of the insured. And the second mission is to be ensure that the saving from the insurance company is for the development and promotion of the economy. And we need to be strict in terms of complying with ratio and prudential criteria applied on the market, but strict should also mean what we are looking for in terms of developing our market. In that regard, I'm happy that operators are saying this, the ones operating on the ground, because the first mission is to be able to have that financial might, solvency, that makes it possible to honor their commitments vis-a-vis the insured. When it comes to claims, they actually pay we, the regulators, to ensure that this happens permanently.
Future of Africa's insurance industry? What kind of partnerships would you like to see going forward?
Alors, le partenariat peut se situer à plusieurs.
Well, it can be at several levels. We, as a young market, we work tremendously on partnership between the regulator, the operator, because we believe that together we will be able to develop the market by setting a number of rules as well as a number of milestones. That partnership is important. Let me give you an example. In our market as we speak, I mentioned the important gap that we need to fill. For the DRC, we focused on digitalization. Digitalization means that we need to control the various insurance companies. We've put in place a digital platform that required all insurance companies to get connected to our platform to be able to generate insurance certificates. And we need good understanding in that regard as well. That provides direct access to the production of all insurance companies, but they have to be compliant and play the game. And that will assist us in terms of our control as a regulator. All the same, that provides prospects to develop the market digitally speaking. We've been talking about financial inclusion backed by digitalization. And so that collaboration and partnership will allow us to develop other digitalization aspects in terms of underwriting, claims, declaration of claims, as well as paying the claims. Now, this is major step forward, and we need that partnership and good understanding with the insurance companies and their regulators.
Convey to our audience, do you have any?
Moi, je suis.
I'm pretty much overwhelmed by the two topics we're dealing with, the opportunity to consolidate, but I'm focusing more on solvency and financial might of insurance companies. That makes it possible for us to play our two roles. We want to see our insurance companies in the developed countries. We should have that financial might to address the challenges when it comes to claim, and also to have that financial capacity to retain maximum in your country. Once that you have a very important equity, that issue of digitalization as well is at the heart of our concern. In particular in the DRC, for the development of the market. We also need to encourage insurance companies to embrace digitalization to ensure financial inclusion, because in the long run, majority of our population can create a broader market with a more diversified risk at a lower risk for the companies. And therefore, these are issues that are of paramount importance. We support this, and we are developing this in the DRC. Thank you.
Our session, and if you're interested in the next panel, which is on financing micro, small and medium-sized enterprises, they'll be setting up in the next few minutes. Thank you so much for joining us.